2026 is here. Where are things headed when it comes to the economy? What should you be thinking about? On today's episode, we interview Tom Siamatis, excellent economist that's going to help us think through where things are today. What should we be worried about? So make sure you listen to the entire interview.
We hope you've been enjoying all the episodes from Secure Your Retirement. If you'd like to keep learning and receiving these episodes, hit the subscribe button and the bell so you receive alerts when they come out. We've helped thousands of listeners get on the path to securing their retirement. Now it's your turn. Let's dive in.
Welcome, everyone, to Secure Your Retirement podcast. And we're excited. Merce and I are always excited when we get to have the special guest we have on today, which is Tom Siamatis. So before we get into anything here, Tom, I just want to say thank you for hopping back on the podcast with us today. We appreciate it.
Hey, glad to be here. Happy New Year. I know it's almost February, but Happy New Year's just the same.
Yeah, as we record this today, we just had our big ice storm here in the Raleigh-Durham area. Actually, the whole, I guess, nation's gotten hit by this storm, almost the East Coast at least, and in the middle of the country with lots of snow and real cold weather. But Merce and I are working from home, and you're out there in Kansas, and looks like you've got some snow on the ground too, and everybody's dealing with this cold weather. But what we wanted to do and what we like to do, Tom, whenever we have you on, is just really kind of look at things from a big macroeconomic perspective. And right now we are in no short order with topics. I mean, we've got a lot of stuff going on right now. So maybe if you could just set the foundation for us as we sit here in the first part of 2026, how do you see things right now from an overall perspective, just big picture?
Yeah, I think it's interesting that we finished off the year as our third straight year of up markets, right? Which again, if you look at what happened last year, you would have never thought that it would have been an up year, right? I mean, the new administration came in, you had the tariff meltdown, and then you had the ramp up again, the government shutdown, et cetera, et cetera, et cetera. But I think last year was sort of an example of where people need to sort of focus and remain disciplined because there was ample opportunity to throw in the cards, right? Because there's a lot of panicky type stuff that could have gotten you off of the mark, right? So it goes to show you that, the markets, often, defy what logic would say. And this year is no different, right? I mean, here we were supposed to start the year off, supposed to be the big beautiful bill was supposed to come into effect, and the economy is growing. But I don't know anybody that had Maduro on their dance card, right? At the beginning of the year. So that kind of happened. And then you've got all this like civil unrest going on and the whole Greenland thing just kind of, and that's just January. All right. It already feels like I kind of like, and I was joking about it the other day. I kind of telling people I need to start writing year in review articles for just the month of January. Right? So it just seems like all this stuff is kind of ratcheted up. That doesn't mean, anything other than I look at a couple of indicators, right? If you have a Santa Claus rally going into the holidays, that's bodes well for the upcoming year because the momentum comes forward. If you have a first strong week in January, that bodes well. And then the trifecta is if you have a strong January, that bodes well for the market for the year. That's just sort of the way things play out. But, it's anybody's guess where we go from here. GDP's been strong. I understand fourth quarter GDP is expected to be strong again. You're going to have some money coming into the system via enhanced tax refunds. So it feels like it's stacking up to be good, but it's kind of crazy that we've had everything that we've had so far this year.
Yeah, I think just when it starts to feel like it's stacking up to be good, there's that inevitable um, messaging that comes across that can jar the markets a little bit. So, in January, we've had, well, go back to April of last year when the beginning conversations of tariffs kind of came about in 2025. And then, that took several months to get settled out. And once we thought we were kind of past that a little bit from the negotiation aspect of it, here in January, this whole conversation around Greenland and Europe has come back into the forefront around tariffs and stuff. So let's just talk about that for a little bit. Maybe for a second there, maybe just kind of recap the Greenland scenario, and then also, how do you see this playing out? What do we need to be thinking about there from the tariff side?
Sure. So Trump, has been made no bones about the fact that he wanted to take over Greenland. Okay, I get it, and he said the same thing about making Canada the 51st state. However you feel about that, there are legitimate um, reasons for national security purposes. If you look at people look at Greenland and they think to themselves, what is this place? But if you look at it from the top of the globe, it's pretty interesting, right? It pretty much is literally like a dagger that goes in between us and Europe, right? And the fact of the matter is, it is strategically important. Now, how he's gone about highlighting its strategic importance and the rhetoric around it isn't really constructive. But I find it like really rich and ironic that Europe sent soldiers over to Greenland. And isn't that kind of tell you that it's not properly defended if they have to send people from over there to defend it, right? So he's kind of got a backward point there. But, at the end of the day, he got upset because the NATO members weren't supporting acquisition. And so he threatened them with tariffs. And then we had this whole, crazy Monday last week where we sold off nearly 1,000 points. And then somehow, behind the scenes, a new framework was I don't think we're going to get anything other than we've already had. We'll probably get more in military installations there and maybe have a little more autonomy with that. But I think it was a huge it was almost like a mini Liberation Day scenario like we had last year. Remember, it was like he came out and he hit everybody with the tariffs, and then the market just melted off. And then just as quickly, he backed off, and then the market came back, right? And that was kind of like a mini version of that last week. Oh my God, we're going to hit Europe with tariffs. And that came on. And then all of a sudden, we had a framework, and 2 days later, we were right back to where we were. So again, you blink, you missed it. But I don't know about you, but I'm not looking for property in Greenland. It's not a place, not after the cold we've got here this week. Thank you very much.
Yeah. Well, something that we were talking about just briefly that we're also seeing right now is, and again, this is one of those things that could happen here in the first part of the year and kind of fizzle out. But, what we've seen here is, in particularly with natural gas having a big surge over the last few days. And in fact, I was looking at it and it didn't even look like it's going to slow down even right now. What do you think's going on with that? As far as, I mean, I've got some theories, but I'd like to hear your side of things as to what are you seeing in that area right now as far as what's happening there?
Well, as far as natural gas pricing,
Yeah, yeah,
well, I think a lot of it's got to be this weather, right? I mean, when you give a forecast that it's going to be, negative degrees through across most of the country, I mean, that usually spikes over the course of that. But, my understanding was that there was going to be more energy coming online, right? And things were going to get cheaper, and that sort of belies that, right? So, like, I'd be curious to see what you're thinking as far as what your theory is with this.
No, I had looked at some things here recently that talked about the fact that it looks like the administration's going to do some fast tracking on some permitting on some lands to allow for more exploration and a little bit more, I guess, going after that part of the thing because of the energy that's going to be needed right now with all of the things going on with AI and different things that are got to be created. And it was basically around this idea that other parts, like you take China, has really done a lot to increase their energy production, whereas the United States really has not done a lot to increase their energy production. And if you look at with all the things that are happening within the AI world of all the energy that's going to be needed and all of the infrastructure there, we're a little bit behind on that when it comes to energy production as far as the increase of that.
Yeah, so I don't disagree with any of that, but the stuff that they're supposed to do is supposed to lower prices, right? It's supposed to make it more affordable, right? The fact that, the whole Venezuela thing, if their oil comes online, for example, right? Theoretically, that was sanctioned oil, so that could be, additive to decreasing the price of oil, right? The hubbub in Iran that we've got going on, if that regime somehow is replaced and their oil then becomes marketable, right? Those are two places. Now, I understand that the administration wants to create more energy, but if we're not seeing it, But I think, natural gas prices and oil and heating oil and things like that, they just naturally spike in the winter anyway. And I think this past week, I just think you may have some people that are, trying to take a little advantage of the fact that we're going to have some cold weather here for a little bit.
So the idea of affordability keeps coming up, and getting prices back down, and you're continuing to have this divide of people that just can't afford living normal lives these days, and then you've got the divide of the wealthy that you're even starting to see. They're not shopping as much as more anymore. Let's say not the ultra wealthy, but the high net worth. So affordability is still creeping in. And I know we were at a conference, and um, uh, that continues to be the theme for the year that was spoke a lot about. So what are your thoughts as far as the issues with, we got some rate cuts at the end of 2025. um, there's still the battle between Powell and Trump going on. He's probably leaving this year, but there's a lot of people on his side saying you can't do what you're doing to him in sense of some of the legal action that's been taken against Powell. So how do you see all this playing out this year from the two perspectives? One, what's going to happen to Powell? The other, affordability for the consumer and cost and CPI and everything like that.
Okay, so I'll talk the Powell one a little bit easier to sew up. So this whole nonsense about a criminal investigation of how money was spent on revamping the Fed, that to me is, I think, not wise. I think that's kind of petty on the part of on the president. Listen, we know they don't like each other, okay? And simply because Powell has not bent to Trump's whims as far as lowering rates. Okay, we get that. But Powell's not an angel either. I mean, he's done some things in the past that could have been perceived political, right? So, needless to say, without getting overly into the weeds with this thing, the two don't like each other. To me, the whole criminal thing is just it's a complication that's unnecessary. Powell can be replaced in May. Why do you want to make the guy a martyr and then alienate people that would vote for whoever? Does anyone really genuinely think that the next person that Trump appoints to the Fed is going to not do what Trump tells them to do? Right? That's so with that as a backdrop, I could definitely see markets probably coming, or as far as the Fed goes, rates probably getting lower. I'll probably go as far as 3 times by this year. Um, CPI, we're stuck around just below 3, not really going anywhere, not really improving. It's better than it was years ago, a couple of years ago. But here's the way I look at like the pricing and affordability is think about like what happened to our market 3 or 4 years ago, and the economy is like taking a bucket of water and dumping it out. Okay. That happens quick and it's there. You got a mess on the floor. Now picture trying to like mop up that water with a sponge, and you're constantly like just picking it all up, trying to put. You're never going to get the same amount of water, first of all, back into the bucket, and it's going to take a long time. That's kind of what's happened with we got inflation, and it's coming down, but all of those embedded costs, rents, salaries, all of those things are embedded into. It's going to be hard for you to have a restaurant or somebody and tell your employees that you're paying $20 an hour that you got back to work, that they're going to have to take less. So we're just going to have to, deal with the fact that prices are not going to return back to where they were in 2019 or 2020. That said, I think, the best way for us to get out of this mess is to actually grow the economy while trying to contain costs, right? And, I sort of cynically always say, like, when has anybody ever not complained that prices are too high? When has anyone ever complained that they make too much money, right? So that's a human thing, but I can see where wages haven't kept up, right? And things have become more expensive for people, right? But I also look like anecdotally around, it's like every restaurant around here in Kansas City is full all the time. You go into the stores, people are buying stuff. So, at what point in time do you look at it and you think to yourself, how much of this is just, and you have to be careful because you can't tell people, you can't pinch someone and when they say ow, you say it doesn't hurt, right? And that's, I think we've got to this point where people have always complained about prices and not having enough money, but in reality, they do have some level of, I guess, validity, right? Because wages haven't kept up. So you can't expect everything to come back down to where it was, because then you would be cheering for a bad recession, people losing homes, businesses closing. That's how prices would go down. You just hope prices can stay where they are right now and people start making more money because the economy is growing. And at 4.4 GDP in Q3, and they're saying maybe 5. If we can keep that going and people can make more money, that may alleviate some of it, but it's going to take time. So that's kind of my theory on that. But again, there probably somebody has a different way that they'd look at it.
Yeah, I did hear I forget which podcast I was listening to, but they were talking about housing and for the longest time you had way more people that owned houses that had the lower interest rates, the sub 4% interest rates. And at by the end of 2025, that had flipped to where you've got more people owning higher interest rate mortgages than lower interest rate mortgages. So those a lot of people didn't want to move because they didn't want to go from a 3% mortgage to a 6% mortgage, but eventually people had to buy houses. And so you have more that have 6% mortgages than the three today. So I think that the good side of that is people are more likely, there's going to be more turnover in the housing markets. There's going to be more availability, and inventory was a big issue a couple years ago. I think that's going to change a little bit. Any thoughts on that and where mortgage rates go from here for the person that's still kind of waiting to buy because it's still so very expensive?
Yeah, I think rates do come down, but it's really not like, you have to look at it from a perspective of historically, 6% mortgage rates are not crazy, right? I mean,
Right.
I tell the story about my dad, right? He built a house in 78 and his mortgage rate was 14%. So, if you're coming from it near term for where we are right now, your near term experiences, yeah, like rates were next to nothing after the financial crisis, right? And you could get a low mortgage. I don't think that we go back down to a 3% mortgage rate, right? But at the same time, I think maybe a more natural rate would be somewhere around 4.5 to 5.5%. I think that's fair for something, for a 30-year investment for a lot of people. The bigger problem, honestly, is from the affordability standpoint, is just the pricing of homes, right? I mean, home prices have gone up like crazy, and you mentioned it a second ago. Like, let's lean on the supply side, right? Start making more homes. I think a lot of home builders and developers stepped away after the financial crisis, right? And you had all of those homes that had, people mailing in their keys and walking away from them. And I think that the demand hasn't kept up. So that to me is another one. And I don't know if you guys know about this, but like something like 0.25% of the price of a new home is all regulations and permitting. So, can we do something there? Yeah, it'd be nice to lower prices of homes and make them a little more affordable. But if you're a young couple, your late 20s, early 30s, and don't have a kid, it's kind of hard to, even if you don't have a kid, you're both working, try to, scrape things together to buy a $500,000 house. It's a lot. So, it's twofold. It's not just the mortgage rates, right? It's also the just sheer price of a house. So,
Yeah. So, one of the things that we like to always include in on these discussions with you, Tom, is, and we understand we always put that disclosure out there. We're not going to hold you to it or anything. But if you sitting here in the first part of the year and you kind of had to go out in your own thoughts, how do you think 2026 is going to play out? What are some of the things you think as you look at where things are today? If you had to say, hey, here's some things I think we're going to probably see this year, what would be some of those things you think we're going to see?
yeah, I think that's always tricky, right? I mean, because you're trying to forecast, and it's just, forecasting is a fancy word for guessing, right? I know there's some certainties out there, right? We're going to have an election, so you're going to have all the hubbub about the midterms, right? There's the other certainty that you have is just the uncertainty of the Trump administration, right? Like, what are they going to focus next, right? Is Greenland going to come back? Is Iran going to fall apart? Do we bomb Iran? Do we not? That kind of thing. Those are the geopolitical stuff because you never know, right? Trump will just step in front of a microphone and say something, and the next thing you know, that becomes the driver, right? Earnings should be good. GDP should be growing. People are going to get money back, more money back because of the quirks of the tax bill. So it'll appear that they're getting more money back. I still think the market is on pace to probably clock in not as good as a year as it did the past couple of years, but I'd still say double digits. So maybe like 7,700 on the S&P. So again, the big thing is going to be is your patience will be tested, right? There's going to be, again, just like last year, opportunities for you, like government shutdowns, and we may have one at the end of this week for all we know, right? These things will just keep coming fast and furious, and at the end of the day, you just have to make sure that your plan is such that it can withstand this stuff. And that's why I think it's important that clients, check in with you regularly, right? I mean, you guys need to make sure that we can't keep up with this nano technology where guys are like planting, their little trade centers 30 feet in front of the other guy to make quicker trades. We can't do that. We don't have that capacity, right? But we do have the capacity of a long-term perspective and a plan. So I think to me, those are the more important aspects that you can control what you can control, but you can't control what Trump's going to say or what happens internationally or or geopolitically or what happens in an election. But you can control your plan. So that's my advice again is double down on the planning and make sure you're comfortable with the level of risk you have because we will have volatility this year and you will be, kind of frantic at times, wondering testing yourself about whether you did the right thing or not.
Right. Yeah. I mean, if you think about the last 5 years or since 2020 and the pandemic and then the election change, inflation issues, interest rate, tariffs, geopolitical, all these different things that all point towards how is it possible we've had a really good run over the last 5 years market wise. We've only had one bad year, which was 2022. Outside of that, everything else has been double digits. So, there are going to be issues. There is going to be volatility. There are going to be headlines that jar the markets. But we talk about it all the time on this podcast, Tom, about the investment strategy, thinking that through, sticking to the plan, having different assets working for you in different ways. We call them buckets. So I think you hit it right on because we just never know how the year is going to play out, and we never know what's really going to be coming our way from a headlines perspective and news that can shock the market. So, well, Tom, we really appreciate your time here today. We love having you on. Listeners love hearing your perspective because you're in it every single day. So, thanks a lot for carving out some time here with us today, Tom.
Oh, thanks very much. And again, Happy New Year, everybody. And hopefully, nobody suffered too bad with this storm and warmer weather's right around the corner. I can't wait.
We hope you have enjoyed this episode of Secure Your Retirement. If you would like to learn more, we have actually created an online course called 3 Keys to Secure Your Retirement. This video course helps you to think through all the different steps as you get ready to plan for and live throughout retirement. You can access this by going to our website, pomwealth.net. In addition, you can also subscribe below to our podcast called Secure Your Retirement.
For more retirement tips, check out these videos. Also, if you find them valuable, please subscribe to our YouTube channel and give us a like.